busiest branch? Is this the busiest branch? It is.
You're very
How busy the
welcome.
Elgin will be, probably.
Thank you guys for coming.
I wish they had one in the center block.
Okay. Awesome. We'll get a keychain over here too then.
I come here, but I also go to the one on the east
You're
side.
very
And
welcome.
then sometimes I have to go to the one on Lee Boulevard. So I come to all of them. But
Okay, y'all's mic is hot, so whatever you say now.
ooh,
Right.
y'all
will be
just
recorded.
you just
We'll be used against you.
so you just heard where I go to bank.
The credit union only.
Yeah.
Since I was a little girl.
Well, good morning, everybody. I'm Ainsley McCarty. This is June, and then Madonna is in the back. We are FSFCU's marketing team. We're the ones who put together the quarterly seminars for you guys. The restrooms are just right through the corner here, and then the student snacks, y'all are free to help yourselves. If y'all need anything, just holler at one of the three of us. Enjoy. Well, June actually has a
You want me to
testimony.
Talk about it first.
Either way, you want me to introduce you? No.
So this is the second time that we held the seminar here. So the first time they came out and talked about all the things about home buying, I actually brought my wife here, and then we ended up buying a house with Carrie. So everything that we learned here was very useful, painless, and we love the house we got.
So glad it was painless.
Working with June, I'm not sure.
Oh no, they were so fun. June has actually become one of my good friends now. We make this, everybody says your clients become your family before your family becomes your clients. And it's actually true. And June and Jenna are a testimony of that. Like, they truly are my best friends now. They make the best bulgogi.
So good for the bulgogi, but he doesn't share it except with Carrie.
She doesn't share it.
I do not.
So my name is Brenda Spencer-Ragland. I am the owner broker of NextHome Tri-Covenant Realty with my daughter, who is my partner owner, Carrie Austin. We're both licensed real estate agents. I'm a licensed broker. I actually got my license in 1992, way back when. But then I placed it inactive because I was the director of military housing for a very long time, and I could not have an active license because I was working with the military, and they didn't want a conflict of interest. Come in for on-post housing and not sell you off-post housing. So we said, hey, let's keep it inactive. And then as we privatized, I was the senior rep for the installation for the privatization initiative on Fort Sill. So after I retired from the military, I said, maybe it's time to reactivate the license, go get my license. So I got my license, and then I became a broker. And with the broker ownership, had Carrie come in. She told me when she was young, she says, I never want to do real estate. I never want to be involved with housing management because there's too much work involved with it. And I'm not going to touch it, Mom. So as I opened up the business, I said, what do you think about coming on as a partner? And she said, well, let me see if I like it. So in October the 7th, 2020, October the 7th, 2020, she came on board with me and she fell in love with it. And I would say that she's probably the most diligent, most professional property manager that I've seen in my 40 years. And it's not just because of my daughter, it's just because of the care and concern that she provides. But then she also equally impressed me as a real estate agent in making sure that we teach you and that we work with our clients to do what they need to do to make sure that their home purchasing experience is a good one. As well as perhaps it's a second retirement or a business and it's investment property. Mm-hmm. We also do investment properties and we do property management. So I would like to see all of my clients have at least 10 homes, and that way when they retire, they have some income coming in. So I try to teach them to look at it also as a business opportunity, especially if you buy that first home and then you want to graduate and go to a bigger home. Mm-hmm. Think about holding on to that first home, the equity that you have, and then maybe going into property management or allowing somebody to do that. So our goals today are simple. It's to learn the home buying process. And it is a process. There's some steps in home buying that you really need to adhere to because your home purchase is your biggest investment. It is a huge investment and it is a huge commitment. It's 30 years typically. Some will go 15, some will go 20, but most often people will mortgage for 30 years. So you're making a 30-year commitment. So we want to make sure that we make the commitment to a home that you really want and that it is the right choice. So we're going to talk to you about the process. And then we're going to share some tips for you for first-time home buyers. There's programs out there that's going to assist you with everything from down payment assistance, helping you with negotiating closing costs with that purchase, but also that we want to shop the rates. We want to make sure that we're getting the best rates for you, okay? And then if you think, well, I'm not ready yet, my credit score is not where it needs to be in order to get me the interest rate that I need for the long term, we're going to talk to you about how to improve your credit score. And I'm not here to totally just sell Sill Federal Credit Union, but I will admit they've been my primary customer for my entire adult life, and I love them, and I've purchased from them, I've deposited money in there, and I've borrowed from them, and I've paid it off, and I continue to put money in there. And I tell you, because Sill Credit Union, they stand on integrity, and not just with me as a customer, but with helping people get prepared for that financial decision that they're going to make, even with a home purchase. So they allow us to do prepaid credit cards as a client to improve your credit score. And that's what you get with the credit union. So please always consider them for that. And then we want to empower you to make some smart decisions along the way. And we'll talk about that. So the steps: get pre-qualified, okay? And when we say get pre-qualified, we want you to talk to some lenders. We want you to talk to the lender that you prefer. It's always good with the banking institute that you use is to go talk to them about what home mortgages they offer and if they can work with you to get pre-qualified. If they pull your credit and they say, well, your credit score is not where you really need to be for us to loan you the money, then they're going to give you steps to help you, or we can as well, to improve your credit score. And we're going to tell you something that probably your mother didn't tell you, and it's probably the same thing 30 years ago I didn't tell my daughter, and that is you pay that credit card off every month. Well, it actually helps if you get a prepaid credit card, you use it, but you leave a little bit of balance on it.
Correct.
Don't ever pay it off totally.
Leave $10
Leave a little
on
balance. She's going to say $10.
Yep.
And the reason why is it shows that you're responsible, but you are making those payments. So you go in, you get a $300 prepaid credit card, and you shop with it, spend it down. Just go put more money back on it and keep that $300 coming back up. Don't pay it off entirely, okay? Don't zero it out and leave it zeroed out. Actually, that's something my husband and I did initially on some credit cards, and now we'll go pay it off and we just start using it again. It becomes our monthly. Instead of paying cash, we just keep using that credit card, then paying it off, leaving a little bit on there.
Don't want to max it out, but you also do not want to completely pay it off. And you will be amazed at how quick your credit can go. We actually have an employee in our office who has never purchased a home, who we sent down
70
here.
years old.
70 years old. We sent him down here to the credit union. This is one of the only installations in this community that will do this. Get your $300 prepaid credit card, use it for gas, turn around and pay it down to keep that balance of $10 to $15 on it. He came in 3 weeks ago and he said, Carrie, I can't believe I've got credit now. It's amazing.
He had zero credit.
He didn't have bad credit. He just didn't have any.
Yes, sir.
I don't understand what a prepaid card is.
You're basically going in and you're opening up an account with a credit card and putting that $300 down. They give you a credit card, and then you use that credit card. Yeah, you
Yes.
keep that credit card active. Just keep putting that money back on it.
Yes.
Yep. The credit union has, you can, I guess you can do them as much as you want. We tell everybody 300. Do you know?
It is usually about 300.
About 300?
You'll find it as a secured credit card here.
Yeah, it's secured credit card. But you just put your money on it, and then you're using your money making those payments. That's what it just records. They report it to the credit bureau.
So that is just regular credit card?
It does work with a regular credit card, but a lot of folks, especially first-time home buyers, they don't have credit cards. And some of them maybe they had bad credit. They paid all of that off, and it's been 10 years, and they don't have any credit, So we talk them about coming in and getting that secure credit card to improve their credit rating. It works really well. Within 6 months, you'll see a huge difference. Now, honestly, we've seen it in 4 to 6 months. We've seen it improve incredibly well for these clients. Okay, find the right agent. By law, there was a lawsuit, and the lawsuit was pretty specific in saying you have to have a buyer-broker agreement. Most of us, and me included, Years ago, we would go out and we would look at a house, and you didn't have to sign anything. You're just calling the real estate agent and you're going to go look at a house. Now they have to do a buyer broker agreement. And that buyer broker agreement basically says you're hiring them to represent you. Some will charge you a fee, not all do. We don't charge a fee, okay, for it, but we do have you sign a buyer broker agreement that we're going to work with you. We can work with you for that day, that showing, or we can sign it for 60 days, 90 days, 6 months, whatever you want. But you're signing a buyer broker agreement. That protects you. And then it allows us to go show you homes. It also, because the buyer broker agreement says, if you find the house that you want, I'm not going to tell the seller exactly what you're willing to pay for it. We're going to make an offer, but I'm going to not tell them what you're willing to pay for it. Okay? If you're willing to go up on that offer, I'm protecting your interest, unless, of course, you tell me to. Okay? So, also with that buyer broker agreement, once we sign it, it gives me the ability to start negotiating on your behalf within the limits of what you want. So that includes commission. So you call and you say, I want to look at a house. And I said, well, let's come on in and let's sit down and go over, do a buyer broker agreement, or I'll meet you at that house. We go over it and I'll tell you that I'm representing you now. You'll be hiring me. I'm not going to charge you for that. But if we go under contract, we'll discuss commission. More often than not, and I will tell you right now, it's about 100%, I'm negotiating the commission in that sales price. So I'm going back to the seller saying, here's what we're going to offer you, and you're going to pay the commission. And so far, it's always worked where the sellers paid the commission. Sometimes we've had to negotiate it. Instead of 3%, it's 2.5% or 2%, whatever that is. And regardless of what you hear, there is no set commission. Commission is, you're hiring us. It's always negotiable. It is a negotiable point in the contract. So always remember that. Right? And then we're going to start house hunting. And what we're going to do, based on your pre-qualifications, based on your requirements of what you're looking for, if it's a 3-bedroom, 2-bath, 2-car garage, 1-car garage, 5 acres, 2 acres, walking distance, sidewalks, Eisenhower, MacArthur, whatever your criteria is, that's what we're going to pull up, and we're going to start putting together a plan to go show you those homes. That's the house hunting we do. Now, you also have the opportunity to go out there and pull some listings and send it to us, but we have access to all of the listings in Oklahoma, both through my state and our MLS, and also those for sale by owners. So we're going to help narrow down based on the criteria that you set. Now, there's a couple of negotiation points in a process. One is when we make an offer. So the listing price is just a listing price. So I say, you know what, I want to sell this house and it's $150,000. That's what I'm wanting. That doesn't necessarily mean that's what you're going to pay. You're going to look at it. We're going to pull the market analysis, and we're going to recommend to you what you pay for that house based on the market. Okay? And then we're going to negotiate that price on your behalf with the seller. They come back and they say, well, we don't like your offer. And they counter offer. We have the option of either accepting it or countering. Just this week, I countered 4 times. We finally went under contract. And we were almost back to the point where we started. So it's just really interesting, because oftentimes what sellers are doing, they'll put it out there and they'll list it for sale. And you go in too quick and they think, ooh, I need to wait a few days. But then if they don't get more showings, or if they get offers less, whatever, then they may be more enticed to come back and discuss again. So we're going to negotiate all of that for you. Never, 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 if you take nothing away from this other than that, never, 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 never buy a house without an inspection. Always get it inspected. Always get it inspected. The inspection is your cost. Typically, it's about $350. That inspection is going to save you thousands, both in repairs but also in negotiation. So unless you're married to an engineer or something that does their own inspection, kind of knows what the cost is, or you've done it,
Your engineer
never,
husband's
never,
laughing.
Never, never, never buy a house without an inspection.
Absolutely agree.
What we're going to ask you to look for and what we're going to ask the inspector. Now, I'm going to tell you, when the inspector goes in, the inspection report comes back almost 100% of the time. It'll come back and it'll say, get a qualified roofer to look at it. Get a qualified HVAC tech to look at it. Get a qualified plumber. But what they're doing is they're taking pictures of every major component within that house, and they're telling us things that's going to help us in that negotiation. So then we're going to put together what we call a TRR, treatment, repairs, renovations, things that we're going to negotiate. That's the second negotiation that we're going to do. So we're going to put that together, right? And then we're going to negotiate on your behalf for those repairs to be done, okay? And we're going to know the cost of those repairs. The seller's going to get the cost, or their agent's going to get the cost, and we're going to come to agreement whether they're going to do all the repairs, or we're going to negotiate what repairs are going to be done and what repairs you're going to end up doing. It's so valuable. And they may come back and say, you know what? I don't have time. I can't do this. But what I will do is negotiate price. So we will negotiate the price so that we can get the work done before you move in. Or if you know how to do it and you want to do it, then at least you get the price reduction so that you can get the work done. However, when the appraiser goes out, the Lending Institute, VA, FHA, or conventional, when the appraiser goes out, if he comes up with repairs, she or she, they come up, they look at it, and they say, you know, the house is valued at $150,000. That's notional. He's valued at $150,000, but you've got paint that's trimming, and you've got fascia that needs to be repaired. That has to be repaired before that value is met, before we can close. The lender will not allow us to close if the appraiser said there's repairs that need to be done to meet that value. So we have to get that done. That is a non-negotiable. If the seller says, well, I don't want to do those repairs, well, then you're not getting the $150,000, because the appraiser will not appraise it at that value unless those repairs are done. Make sense? So we have to do that. VA, typically they're going to look at sometimes roof. If the roof is really bad, they're not going to approve it. But a lot of times it's peeling paint, it's rotted wood that has to be replaced. That's some of the things that we see. We don't see a lot with hot water heaters or HVACs. That's normally not a big appraisal repair item. However, when your inspection comes back, what we're going to do is we're going to put together that request for repairs. We're going to ask for the invoices and the warranties. So if it was a roof that was replaced and they said, well, we got to get the roof replaced now, then we're going to ask that they replace it before closing and give us the warranty. If it's a house and the roof was replaced a year ago or 2 years ago and it's still in good condition, there's no issue, then we're going to ask for the remaining warranty. So we'll get that and you'll have it before you close. Anything you want to add on that?
No, ma'am.
Nope. Okay. So there's your appraisals. The appraisal value, it's negotiable. I would say it's non-negotiable, and truly it is, but it is negotiable in the sense that you can pull money out of your pocket and pay the difference. But I'm not going to advise you to do that.
Absolutely.
If they appraise the house at $145, life happens and you've got to turn around and sell it. I want you to get your $145 that it was appraised for, right? I want you to get that. But if they want $150, there's a $5,000 gap. You have that option to pull that out. But what I would tell you to do is let's have them sell it at the appraised value price. And more often than not, that's exactly what happens. All right. And then you go through your loan approval process. So there is a really beautiful, I mean, it is so pretty. It is an orange Mustang sitting out on Billingsley Ford lot right now. But if you're in contract and you're getting ready to buy a house, don't go buy that orange Mustang. Wait until you close. Because they did your cash to debt ratio based on your current.
Yes.
So don't be running out buying Mustangs during that process. And we've had it happen. We've had it happen where a young man went out and bought a Corvette. It's like, oh my gosh, how'd you buy a Corvette? And we had to extend the closing for a little bit because we ended up having to put the wife on the loan to make sure that the cash to debt ratio and everything that the lender required met. Okay, same thing with furniture purchase. Wait for all of that to happen after
you close. No
Okay.
new credit cards.
Yeah.
Absolutely nothing that is going to cause a ding on your credit while you're under contract.
So once you go under contract, Once you get that pre-approval, until you have closed on your home, don't go shopping. Okay, unless you're paying cash for something, don't go shopping. You can have a gift letter. So if you're a first-time home buyer, so my husband and I have done this where we've helped our children out by giving them a gift. So we have to do a letter telling the bank, because the bank's going to track where that money's coming from, right? So we have to do a letter saying, hey, this $5,000 or $10,000, whatever it happens to be, it is a gift to them, and it's not a repayment. It is a gift. A gift means you don't pay it back. So you do that gift letter, you send it over, but the banking institute, they're going to want that. So you make sure that if you need money from your parents or aunt, whatever, grandma, that you get a gift letter for that money, and it shows it's audit. You can audit. You can see where that money came from. Yes, sir.
Is there any limit on the gift?
No, sir. No, sir. I actually had a dad give a gift of $135,000. That's the largest gift. The house, he wanted to buy them a house. They couldn't find what they wanted. He had his cap at 135, and their house was like, I don't know, 170. I can't remember. And he said, I'm doing 135. You will go up, then you get to do the rest. So it wasn't no problem. He was able to get it financed because they showed a $135,000 gift, and they were only carrying a loan on $40,000. So, and then you go to closing day. This process can be within 30 days, but on average, we're about 45 days from start to finish, unless you already know what you want. No. All right, key steps. So as I said, this is one of the most significant investments that you're going to make. So here's the steps, the 4 steps. You go into discovery. We talk about your financing plan. We start searching for what you want. And then, of course, we come up with our buyer broker agreement, what we're going to work for you, how we're going to help you, okay? And then we start doing some screening. We'll start narrowing it down. If you say that you only want to live on the east side or the west side, then we're going to look for the east and the west side. We're going to start bringing down a list of homes for you to look at. At the same time, we're going to be able to take the listings that you give and start researching those. What we do in our office, we're going to pull the county assessor's report, because whoever's selling that house, you want to make sure they're the actual owners, right? Have you heard about the fraud where people are selling other people's houses or renting out other people's homes? So when somebody comes into our office, if they want to list a home, first thing we do is go to the county assessor to make sure that they're the owner. Make sure that if they're married or single, how is it titled, right? So we're going to pull the documents on that county assessor to make sure that the owner is the one listing the house. If it's under an LLC, because we do have investors that put their homes in an LLC, we're going to make sure that they have the authority to sell it. So we'll go to the county assessor's page, we'll start pulling that data, start looking at it, and then we'll start pulling the market analysis. We're also going to tell you that, hey, part of the search that we want you to do is we'll go to open houses with you. You see some open houses, we'll go with you. Be happy to go with you and show. And we can also schedule private showings so that you've got the time that you want to look around. All right. Then we're going to keep you updated as you keep us updated. We become text buddies. We start texting and calling and letting you know. And then again, as we find the one that you want to make an offer on this week. No, last week it actually started, and this week it ended. We made 4 offers before we got the one that we wanted accepted, and it was because they wanted closing costs paid by the seller. So oftentimes when you put in the offer, if it's full closing costs, which can be, depending on the price of the house, $8,000 to $10,000. So the seller's not interested in paying their closing costs. They didn't have the closing costs to do it. So we just kept looking for houses that we felt would meet the appraised value and that they would pay the closing costs that met their criteria, and actually found the best home for them. It's really beautiful. So then we go into the negotiations. Your negotiation, there's really 3 good points, and that's when we make the first offer, and then when we do the TRR, and then, like I said, the appraisal is really non-negotiable. If they want that price out of it, somebody's got to pay, because that's all you're going to get. Because If they want 165 and it's 150, a lender is not going to loan them 165. So unless they've got cash in the pocket, we've got to bring the seller down to what the appraised value is, and that's what we negotiate and try to do. So we actually had one that came in $20,000 less than what it was listed for, and the buyer said, I'm not paying more than the appraised value, so the seller had to come down $20,000. And they did, because that was the appraised value based on all the comps. Once you lay out all the facts, what's selling by square footage, typically they're going to come down. They're reasonable. All right, then it goes into contracting. We work with several title companies in the office. We're always going to ask that you get title insurance. Title insurance protects you. It brings it up to date, but it also covers you in case there's a blotch on that title. So we want to make sure that we get title insurance. We're going to ask you to put down earnest money. We always try to get 1% put down. That just goes toward your closing cost as well. So we'll have you put down earnest money. We're going to be reviewing all the disclosures. By law, the seller has to list the disclosures, which is basically what they know about the property. The buyer has the opportunity, of course, before the offer, they'll look at those disclosures and make sure that they're in agreement with it. We schedule the property inspection. The lender is going to schedule the appraiser. Typically what happens is we'll go through the property inspection and make sure that the house is foundation's good, HVAC's good, roof is good, hot water heater is good. There's no issues there. And once we get through that property inspection and we've negotiated and it's going to go forward, your lender is going to go ahead and call. So the credit union, for example, would go ahead and call out an appraiser. The appraiser is what the buyer pays, right? If it's VA, the cost is $750. It used to be $500, but within the last year, it's been raised to last 2 years, I guess. It's been raised to $750. And then again, we go through the repairs and or any credit in case they don't want to do the repairs and we want to take a credit instead. Before we close, we do a final walkthrough. That final walkthrough is so important because you've already listed 10 items that you want fixed before you close. We're going to check to make sure those 10 items are fixed, right? So that final walkthrough is important. You'd be surprised at how many times we walk and things just don't get done. It happens to all of us because you're all hiring all these different contractors, and sometimes something gets missed that we gotta get done. And then we sign the closing documents. Start moving. You're funded. You get the keys, and you move in your home. But we're not going to leave you. These are just some of the steps, again, that we go over. It's critical here in the financial planning is to really understand not just your interest rate, but what you can tolerate. Can you do a 15-year loan? Can you do a 20-year or 30-year? You can always go in and refinance later, but there's a lot of buyers that have said, you know what, we're going to do 15 years. So you want to talk that with your lender to make sure that that payment's something that you can tolerate. What's going to impact your overall loan? So you've got your loan amount, right? Well, then you also have your taxes, and then you have your insurance. So we're going to have you shop around for your insurance to get the best insurance for you. I will tell you that where we've seen increase in home purchasing has been both in tax increases and in insurance. Oklahoma has very high insurance rates. So that impacts your overall buying power for your mortgage. Okay, insurance is high in Oklahoma. Why? We're still suffering from the hailstorm and the windstorm that we had 2 years ago. And we actually had insurance companies pull out of Oklahoma. So right now we bounce between California, Florida, Oklahoma. And we're bouncing between who's the highest. Oklahoma is like number 2 in the nation for the highest insurance rates. All right, this just talks about some of the touring again. We're going to look for the homes, do the market search. The house that I sold this week, I had 4 offers. He came in with the requirement, I want at least 1 garage. He's actually buying it for his son. He said, I want at least 1 garage, and I need a house with 2 bathrooms. Well, and I said 2 full baths. He said 2 full baths. I want 2 full baths. Can be 2 bedroom, 3 bedroom, but I need 2 full baths, and I need at least 1 garage. The house that we went under contract for has no garage, but it has a 2-car carport that had recently been installed, and it has 1 3/4 bath. Well, in his mind, he said, I'm okay with that because it's got a stand-up shower. So I don't need 2 with bathtubs. So that's what we ended up going under contract with because it met every other criteria that he wanted, and he was good with that. All right. It's the negotiation. Again, I cannot stress it enough. The disclosures are so critical. The buyer has to look at those disclosures. You've got to understand that the seller is the one completing them. The agent can't complete them. I can't complete them. It is against the law for us to complete disclosures because we didn't live there, right? We don't know the property. We're going in and we're doing a visual. We don't know it. If something comes up on that inspection, so there's foundation issues or the roof is bad, and then there was repairs. If that contract falls through, the seller has to go in and update those disclosures. They need to go in and reveal that data that's new. So that has to happen. And then here, the contract, like I said, anywhere from 30 to 45 days, you've got to get your documents into the financial institute on time. So what they're going to look for is typically 2 years of your tax returns. Don't quit your job the day before closing.
We've had it happen.
We've had it happen where they come in and they get qualified to buy a home. The bank calls to verify employment, and they just quit their job. So we couldn't close. They verify it when they start, and then they verify it typically before they close.
Mm-hmm.
So they decided they didn't need to work anymore. They had a house, but the bank decided that they needed to have money coming in to pay for the house. So anyway, we tell them, you don't quit your job. You got to pay for that house. All right. And then once the lender does all of their due diligence to check to make sure it's credit worthiness, they're going to talk to the title company, and they're going to do a balance statement, and then they're going to tell them how much closing cost has to come to the table. We will negotiate on your behalf if you need closing costs. There is limits, like if you do an FHA loan, there is limits as to how much the seller can pay, and we're going to guide you through that based on the home purchase that you do. But we've seen homes sell where we've offered the price and asked for full closing, and we've got it. We've seen homes sell where we've asked for half of the closing cost, and we've got it. And then we've seen homes sell where we've asked for $1,000 and we didn't get it. So it's really just a negotiation point that we have to go through. All right. And then, like I said, 30 to 45 days, if all the conditions are met. We cannot close if the VA appraiser or FHA, if they say that this house is valued based $150,000, if all of these items are met, they're going to come out and inspect one more time before we close to make sure those items are complete. If those items are not complete, then we cannot close. Okay? They want those repairs done before we close. All right. We're always going to tell you that budget for more than you want. Start saving up. Save up some money. If you're looking at a home purchase, it's always good to have about $10,000 in the bank, regardless if we're going to negotiate for your closing. And if you don't, we can still get you there. But that's your safety net, and that's just going to help you through the process and getting what you really want. So budget for more than the down payment. Oftentimes, if you're going conventional, that you're looking at 20%. There's some that's less, but 20%. If you're going with a VA loan, it's zero down. But there's funding fees. There's things that's going to be within that VA process, okay? So make sure you understand that too. Understanding your loan options, we're going to help you with that. We're going to connect you to lenders and to make sure that you're getting the best interest rate and you're getting the best deal for you. There are grants and programs available. There are grants if you're buying in rural areas that we can help you. You've done those for farm grants?
Yes. Yep. The USDA office in Walters, and those are 0% down. It takes a little bit longer. You actually have to pay for your appraisal up front, where if you're doing an FHA, you do not. You pay for your appraisal at closing. But with 0% down and the loan rates that they offer, it's absolutely worth it if you're looking at purchasing land or a home that qualifies for USDA.
Yes. Yes, sir.
I'm just trying to help my kid buy a house, and they keep saying, "Do you want to go conventional or FHA?" I don't know the difference.
Are you now you're helping them buy the home? So are you giving them down payment? Yeah. It really depends on how much you're buying down that you want to. So we can run it both FHA and conventional. Does the credit union do FHA? Do y'all do FHA?
I am not sure.
I don't know either. I know that I don't think you do. I think you do
They
conventional.
do conventional, yeah.
I think it's only
So conventional is going to be 20%.
I've done conventional with them, and it's 20% down.
Yeah, and FHA is 3%.
Huh?
What is the difference?
Interest rate, payback time.
And
Like-
different homes qualify easier for conventional compared to FHA, because an FHA appraiser is going to be much stricter than a conventional appraiser
Why?
to protect the buyer, because it is their first home purchase. It's the same as VA.
Especially on repairs, because
Yes.
FHA is typically going to do a 30-day loan. So, of course, they're going to make sure the property is worthy. But with a conventional, you have the opportunity, same with FHA, you do have the opportunity to negotiate on your overall rates, but they're limited into how much can be paid down. Like for a first time,
Correct.
6%.
Yes.
Seller cannot pay more than 6% of overall closing costs.
Yes.
So, because they want to make sure that the person buying it can afford the home. But you can still give a grant or give a gift to your child. So we've actually given gifts for an FHA loan to our children, and also conventional. A conventional, you go in and you talk to your loan officer. They're gonna look at the value of the home. They're gonna look at the payback time, all of that, and then they're going to talk to you about buying down the interest rate. So sometimes your gift may be more valuable by buying it down, and sometimes it's more valuable to just pay it directly toward the equity of the home, depending on what you want to give. So a conventional is certainly easier to do that because you're right there with your local bank. But FHA is really good for first-time home buyers.
It is, and
It's really good.
there's a local lender also that has the home funded program where there is no cap on how much can be gifted to that buyer.
And you can also, regardless if you want to do this, this is just a scenario. Perhaps mom and dad own their own home. They own their property outright. They don't owe nothing, and they're wanting to help their child. They can use the equity. It basically becomes a lien to help them with that. So instead of paying cash, you're putting your it is an option. Oftentimes, folks are using that as their primary home is paid off, but we want to do some investments, so they'll use that primary equity to help them with their investment portfolio to buy. Those are all good questions. I would always tell you to look at both scenarios, conventional and FHA, to see what's available. And we have lenders that can help with both. Okay. And that's what the low down payment is on the FHA.
Yes.
So you can still give them the money, and it can go toward their down payment, but a portion of that's also just helps with that overall equity. And
FHA, you can make a low down payment, you don't have to.
right, you don't have to. Yeah, you can make a big one.
Yes.
Yeah. And most of the lenders that we've worked with, they want to make sure that even after you close, you pay your closing costs, that in your bank account you have at least 2 months of your mortgage payment in there. Like, if you go to closing and you're going to be zeroed out, they're looking at that. So they want to make sure that you've got 2 payments in your banking account. All right. Build a strong team. And how you do that is interview your agents, interview us, interview every agent. Don't just assume. A lot of folks, I've done it, Drive down the road and you see the house you like and you call the person's name on the sign. You call the person listing the house. Well, who's the person listing the house working for? The seller.
Mm-hmm.
So who do you want working for you, representing you? We are Oklahoma. We do have dual agents where you can work for the buyer and the seller. But I would tell you, as a buyer, don't just assume that you've got to go with whose name on that sign, because what you want to do is you want to have somebody that's totally dedicated to you and negotiating on your behalf. And be financially ready. So again, make sure you're making your payments on time. You can do your own calculation. I'm sure that June did. You do your own calculation, look and say, what's my cash to debt ratio? What can I afford? What can I tolerate? What's the payment that I want to pay? So you have an idea of that. We always try to look, even on our rentals, we try to keep people no more paying a 40% cash to debt ratio, 30%. We love it. Okay. And then know the market trends. And it's not just, so be alert. To be a smart buyer, we want you to think about what's going into that area, what's going out of that area. Are they building new homes in that area? Is the price getting ready to go up? Is that going to help us? Are schools closing? Hospitals closing? Are the roads bad? You know, where's it located? There's a lot of things that you need to be thinking about. What's happening in the area? Are they building new plants next door that may or may not be a distractor? You know, you want to know that. So, and also think about, if it's not going to be your 30-year home, what's it going to be like when you want to sell it? Especially if you're military. We see a lot of transit military folks coming in where they'll buy a home and then they want to flip it in 2 or 3 years. It's very hard to flip a home in 2 or 3 years and walk away with any money. So always read the fine print and think long term. Where do you want to be? Now, buying that first home, you come here and maybe you're military, you're stationed here. You buy that home, and when you get ready to PCS out, maybe you keep it. Will it rent out and cover your mortgage? So think long term, not just immediate. And then, of course, we talked about the contract negotiations. That's the hard part. And now we're open for questions.
So before we get to questions, I just want to mention, I think the biggest misconception in buying a home is that you have to have $20,000 saved up. That is not true. Talk to your realtor before you start putting in offers. They can request that closing cost to be paid, as she mentioned. Now, depending on what type of loan you're going to do, there might be a cap on that, but say you're buying a new house. I know how I am. Even if I have $10,000 saved up, I'm going to ask the seller to pay my closing so that I can furnish my new house when I close on it. The money that you are going to pay during the contract period is going to be your earnest money. It is due within 3 days of that contract acceptance. So typically, like she said, that's going to be the 1%.
And it's not a credit card. No
Correct.
Credit card for earnest money.
No credit cards. Has to be a money order or a personal check. And then the second expense that you're going to have before you actually get to closing is that inspection. Okay, so those are the two that you really need to make sure that you have the funds ready for.
On that inspection, it's going to cost you about $350. But I've seen clients walk away with a new roof.
Yes.
$12,000, $14,000, $15,000. One was $27,000. They paid $350 for the inspection.
My buddy Jim got a new roof because he had a really good realtor.
You got a new roof.
So you had paid the inspection, you got a new roof. How much was the
Absolutely.
roof?
A lot.
A lot. And gutters.
He didn't pay for it.
Huh?
He didn't pay
No,
for it.
but you're probably, what, $20,000? And guess who the claim was against? The seller, not
Correct.
the buyers.
Correct.
So he gets a new roof and he gets new gutters. So was the $350 a good investment? Absolutely.
Absolutely.
There were a lot of unforeseen repairs
Yes.
Yep.
that the inspector
Yes.
found, and it was all repaired before you moved in.
And, the inspection comes back, and I will tell you, it's kind of a love-hate relationship. You hire the inspector, and the inspector comes back and says, get a roofer, get a plumber, get an electrician. So we get the roofer, we get the plumber, but it guides us to get that, right? It helps us. And we got the pictures. It also, when we send that inspection over as part of the negotiation, they see how bad the roof is.
Mm-hmm.
And it helps them send it to the insurance company so they can get that roof replaced. So it's $350 that you have to pay, but I will tell you it's probably, and it's not always $350. Sometimes it's $300. That is the best $300, $350 you're going to pay. It is so valuable. We just had, actually it wasn't ours, but I just had to answer it because I'm the broker. But we had a seller. So you get the property disclosure, seller completes it, says they're a new roof. Buyer comes in, buys it. They do their inspection. The inspector says, well, it might be a new roof, but what it really is it's shingles over 2 layers. Well, that's not authorized. So we had to go in, and the buyer says, well, I want paid back for my inspection, because he knew there was more layers on that. So the seller ended up paying her back for the inspection. Then he went in and then he has to go back and work with the contractor, get those shingles off, because they just covered it up. But it shouldn't be the buyer's responsibility. The seller really thought that it was a new roof, because he hired and said, hey, go put on a new roof. And they just covered up the old roof. So he's got his own little issue that he's working through, but the buyer shouldn't have to pay for that. And she wasn't going to. So we got her reimbursed for the inspection. And then he went in and updated his disclosures that it wasn't new, 2 layers, and he's working to get it fixed. Yes, ma'am.
Who suggests the inspectors? Like, can you find your own inspector, or do you guys like say, hey, here's a list of inspectors?
On our MLS, so we're a member of the Lawton Board of Realtors, and on the MLS, there is a host of inspectors, and we're going to give you that list, and we're going to say, here it is. And you may say, well, who have you used? Well, we've used them all, but
Right.
What do you know about this person? Well, I can tell you, I know one's a fire inspector, one's a plumber, whatever, but it's your choice. You decide who the inspector is that you want.
Okay. Now, are there any, the second part question, because my cousin had purchased a home 3 years ago, and he hired an inspector, and they're like, well, we don't use him. You need to choose the ones that we have here.
I would never tell you that.
No.
Okay, and so was the other part to the question. Are there any red flags that you have for like?
Some inspectors are incredibly diligent.
Absolutely.
Incredibly diligent. And they're going to look at every nook and cranny, and they're going to give you a report this thick. So some agents may say, hey, I don't,
Right.
because the inspector, I mean, if we've had some that, they went in and they cameraed the sewer line, and we actually tell people, ask if they do the sewer line, camera it. You want that sewer line cameraed. You want that video. And some may not want it if they know there's a break in the line. I mean, I hate to say it, but you should. If somebody tells me not to go with something, I'm going to question why.
Well, and that was the thing, like, are there red flags for realtors? Like, if they tell you certain things, like, should you, like, the little flags be popping up? Like, I don't know if they should be saying this, but you can't necessarily question them,
Yeah, there's some things like, the disclosure we represent if we're the listing agent. So if it's Carrie and I'm representing the listing, there's certain things that I can tell and certain things I can't. If there is a defect that I know of that's not disclosed, by law, I have to disclose it. So what I do is I go back to the seller and say, you have no choice. You either disclose it or I'll disclose it. And I've had to do that only one time where I disclosed something. And, most of them are always, and they're like, yeah, that's fine. Just go ahead and put it in there. You disclose it. I don't care. It's like, okay, well, I'm going to disclose it. So if Carrie's representing the buyer, then she needs to be representing that buyer and working on that buyer's behalf.
Absolutely. I would say picking your inspector is just like, when you're going to a restaurant, look at the reviews, see if there's been negative reviews on that home inspector.
Thank you.
Yes, ma'am.
I did verify with AVP of lending, and she did verify what you do FHA.
You do FHA.
Perfect.
So
That's good to
fantastic.
know.
So we need to have you guys come over and talk to our agents.
Yes.
If you can find out who it is so that they can tell them, because I did not know you did FHA loans.
She said she just give her your information. She'll reach out to you guys on Monday.
Perfect.
Fantastic. Because what we want to do is it's the same thing with inspectors or lenders. Shop the rate.
Absolutely.
Get the best rate for you. And oftentimes, if you're doing that research, gathering that information, they're going to talk to you. They're going to try to get your business right. So it's just like anything in life. It's negotiable. So shop your rate. And ask also, can I buy down my rate? Any more questions? Who wants to go house hunting? No, seriously, I'm gonna touch just briefly. Think about